What's going on, guys? Philip at Trade Genius. Hope you guys had an awesome summer. As we head into fall here, I wanted to show you guys a chart that has a couple new things on it that I haven't shown you guys before. And one is going to be the new Trade Genius Fulcrum indicator. I'm going to explain what that is. And then I have this shaded area, which basically I treat as a line in the sand for being either a bull or a bear when it comes to the longer term time frame on Bitcoin price, in this case the weekly chart. So I'm going to discuss exactly what's going on here and how you can play that to your advantage in either trading or accumulating Bitcoin. All right, so let's dive into this video.
Trade Genius.
Guys, really quickly, we do have our specials running. $3.99 will get you into the room with us, and it's kind of our starter package. That's for 12 months, and you'll be in there every day with us as we go over the different signals in all the various markets that we cover: stocks, ETFs, crypto, binary options, all that stuff. As far as the indicator I'm going to show you guys today, that's in bundle number 3. Again, these are 12 months of service, so very good value. All right, let's dive into the video. So first off, what you're going to see is a shaded area. All right, that's going to be what I consider the bull or bear line in the sand. So if price gets above that, basically you're just bullish, and if we're under it, then you're looking for shorts. And I shaded it blue because it's kind of like being underwater if you're under it. So just a couple things to note with that, and let's just turn off the fulcrum for right now and discuss this. All right, so basically what I look for here is anytime you are running above it, you're basically looking to swing off pullbacks to it. Okay, so like what we saw in the bull market, it's a good indicator for that. Also, the other thing that you can do is when you're coming out of, so this is, I'm just talking about longs now. If you're coming out of the condition of being underwater, right, and what I look for is 2 consecutive closes over the line in the sand here. Once you get that to me is your green light that you can start looking for longs and get long. So in this case, like here, you would get long. Like in this case, you would get long from this point. Here's 2 closes here, looking for the pullback, get long. All right, so and these are decent weekly swings. Now, same thing is when you get under it, and usually when we get under it, it seems like it's always with a pretty powerful move. And so this was the COVID crash, obviously. The speed in which that thing crashed was pretty severe, and it just happened very, very quickly. I mean, these are weekly bars, and in 1 week we basically capitulated, and then it was just a really quick move back up, which I think caught most people, including larger funds, off guard as far as how fast this thing snapped back. But once we got our second weekly close, that was a green light to continue to go long, and so far so good. Now, so that's basically how you play it. You're looking for a couple weekly closes to confirm either below or above, and that's your green light to go ahead and start going in the direction of price, whether it's underwater or overwater. And so right now, what we are looking at is a condition where we've been testing this line, right? And I'm not a huge fan of when we do this, okay? And the reason for that is because the more you start grinding onto a level, the more it tends to weaken it, and then ultimately you break through. It's kind of similar to what you see here, actually. We get down to it, grind, and then you have like one big liquidation break, takes out the previous lows, which would be this low and probably these lows as well here, and takes that out. Okay, now that's basically everybody's going to be looking for an opportunity to short that move. What I would look for is probably another move back to test the area of the break, usually is how it works, and then it rolls over again. Okay, so that's the warning here, I think, with this price action. And keep in mind, we still have a price gap below us that has not filled. They got close to filling here, didn't quite fill it. So we need to get down toward below 9,800 and fill in that gap on the CME chart. And you can see that here we got close to it, didn't quite even get to the mid gap level. I think these lows are in jeopardy of being stopped out. You know, there's going to be a bunch of stops under here. So I do think, and also too, our measured move from that head and shoulders on the futures comes down and would basically, that measured move would take that gap out. So I still think the odds are that we are going to see that lower low. And there's a lot of uncertainty that would agree with that, with the elections and things like that coming into play. It's going to be very volatile for all markets for the next month plus as we get into the election. Okay, so that's basically this area, the shaded area, is basically telling us to be on our toes as far as price on Bitcoin. Obviously, if you're a long-term hodler, at this point in the cycle, you're looking to add to the stash as opposed to taking away from it. When we get to areas like this after halvings, right, that's when you start looking, because now long-term, typically when you start getting into this bearishness, it'll be an extended period of pullback before getting bullish again. So this is just it's good to understand where we are in terms of this level and how that relates to where we are post-halving. So post-halving, usually we have a steady grind up. However, we will have periods of weeks where there will be basically a technical bearish market short term, and you can use that to your advantage to accumulate or be short-term short position on Bitcoin. All right, so this is the Fulcrum indicator. It basically is giving you the fulcrum point for price. So there's no lag like some of these indicators have as far as calculating previous price action and then running it through an algorithm, because most indicators typically lag. But this is telling you, based on what's happening with price, who's in control and where your fulcrum price fulcrum is. And if you get below that, then it's going to flip colors. All right, so if you get below it, it'll flip to red or reddish. If you get above it, it'll flip greenish. But it gives you a good visual representation of what's happening with price and who might be trying to get control. So in the run up, you'll notice it turned pink here. Now the way we use this is we don't necessarily get short here because it went flat. What we're looking for is a step down like what we got here to let us know that, hey, bulls are no longer in control. This is a bear market starting, and you want to be looking for shorts. And so those are just warning signs when they go flat. Likewise, when we are here, you'll notice when it flips green, it doesn't really step up. It stays relatively flat. So we look for a condition where it steps up like here. And that's where you would look to start looking for longs. You'll notice price comes back and bounces up, and that tells you that bulls are trying. Now, when this goes red again, that's the indication that, hey, we're starting to lose it, and then it steps down. This market is still bearish, and you're looking for continuation. All right, it's just a way for you to know what the condition is. And the way what we like to do is trade in the direction of this in a smaller time frame. So if the weekly is telling you, hey, it's red, or it's warning you red, then you start to look for your smaller swing trades in that direction. Okay, so that's how you basically want to use this on a higher time frame to start playing in lower time frames. So we like this a lot for our shorter term plays, as long as it's in agreement with the direction or the color of the fulcrum. So that does a really good job of telling us when to be careful or when it's okay to be buying those dips or selling those rips on the smaller time frame. So it's pretty powerful, and it works on everything. This is not something that only works on crypto or only works on stocks. I mean, it works on everything, and futures included. And so it's a very powerful tool. And really what this came from was, the larger money will follow the higher time frame fulcrums as to, when is it time to head for the exits, or when is it time to start building long-term long positions. But you can apply that theory to all different time frames. But again, you're looking for a higher time frame color to agree with your shorter time frame swing play. So anyway, it's a very powerful indicator. We go into it more depth in the chat rooms and on our training. And anyway, that's just another tool. We've been working on a lot of things, and this is one of them. So I think it's going to be beneficial to keep tabs of where we are in terms of color change or potential color changes on the price of Bitcoin. So we'll be keeping tabs on this condition as we cover the price of Bitcoin. And then here's everything together, and you can use this in conjunction. So price gets underwater, you look for the pivots to confirm, and anytime they start to turn red, that's your green light. You can use either when it's going above, hasn't really confirmed bulls are in control, you can use this as an area to see that price isn't getting out of the envelope and it rolls over. So you can use this in conjunction as well to confirm your position. Obviously, when this started to turn green and step up, and it was still underwater. So you had a early, you can use these as early entry. And then also when you combine both of them, it helps you with knowing that you're probably not getting the true breakout, because the fulcrum might look like it wants to turn, give you an early warning that it's changing, and you can get long in here, but you just have to realize that you're really truly not out of the woods yet until you get back out of get back above water, so to speak, right? So that's where this both of these techniques come into play. Does a good job of telling you where, like in this situation where the green did start to step up, you know that though, however, is you're really truly not out of the woods yet. Even though short term it says go ahead and start looking for longs, really not getting the green line until you clear that area, that shaded area. But once you did that, if you did take advantage of the more aggressive entry of getting long underwater, then you get a really good entry ahead of these guys that would get in here. So you got in a couple of weeks early on that. So it's an interesting setup as far as using both of these indicators, and I think it does a good job of keeping things in check when it looks like things might change. So you've got checks and balances, but you get an opportunity to start looking for longs earlier, I think, with this technique versus one or the other standalone. Okay, so anyway, just thought I would share that with you guys, and I think it does a really good job of handling when the cycles shift and how to play them. All right, so this is going to be key to our reviews as we go forward every week, and I think that you guys will find it pretty beneficial. All right, guys, well, that's it for this video. Thanks for watching. If you're interested in our products, head over to tradelikeagenius.com or tradegenius.co and check out our specials. Thanks, guys. I'll see you on the next video. Take care. Bye-bye.
Trade Genius.